All right, so welcome to the trading school. So we did a poll, and that poll showed that a lot of people wanted us to have like weekly engagement, not just come here to talk, but to give practical trading advice, practical trading knowledge, skills that you can apply when you finish listening to me. You should be able to apply some certain skills. So that's what I'm trying to achieve with this trading school. So, yeah, by the grace of God, I'm going to be with you guys every Friday from now on, except for the Fridays where we're having special programs like maybe our ETC and other programs are going to be rolling out. So, for those Fridays, like next Friday, we'll be having ATC. So, I will not be around for next Friday. So, you can join Mr. David Alagbada for our early trading course. But, however, this Friday, definitely. And this today I am around. Then upper Friday I will also be around. Subsequent Fridays I'll be around. So today we're going to be looking at the 5 outcomes of a trade. So I already wrote about this before, but I'm going to explain it now. A lot of people might have read it and they don't understand what I was trying to say. But after this webinar, I will send the link to the Telegram group so that you guys can go and read about this again. Because understanding this was a major shift for me as a trader in a positive way. Because a lot of people come into the markets not understanding what they can control, which is the loss. You cannot control how much you win. You can only control how much you lose. That's the fact in this market. So understanding that this is a game of numbers and understanding risk in itself is a game changer. Understanding that this is a game of numbers and understanding risk itself is a what? A game changer. So today I want to talk to you guys about the 5 outcomes of a trade. So the first outcome of a trade is your small win. Small wins are those, not like you made a lot of money, but you didn't even lose enough capital to mean anything. It's just like you are risking, say, $100 on a position. That is from your entry to your stop loss. If it got it, that would be like $100 loss on your account. But on that position, you maybe ended up having like $90 or maybe the $1 one-to-one. That's also not bad. We call that a small win. You will usually, for trained followers, this is the type of results you see a lot. You get a lot of small wins, a lot of these small wins, a lot of them. Then after your small win, another outcome of a trade is called the small loss. This is good because there's no trading system, at least I've not come across anyone, that you won't see losses. However, your job as a trader is not to avoid loss, but to keep them as minimum as possible. Minimum not in terms of quantity, but in terms of your account size. Meaning, if you say your minimum loss per trade should not exceed 1% of your account, or maybe 0.5% of your account, then it should be that way. You should not come to a position whereby you are not losing more than that amount. You get, as traders, note we've gotten 2 outcomes of a trade now. And this today's topic will make you to understand why people actually blow accounts. Right? So I said for small win, they're just like the small win compared to your risk. You didn't really get enough profit from it, but you still ended up profitable on the trade, but not like it was a big profit. Then we go to small loss. Small loss as like okay, maybe you are not losing beyond the standard risk you set. Or sometimes maybe you might have your entry to stop loss might have been $100, but sometimes you can lose that, and that happens to me a lot because I'm a trend following trader. I can lose say maybe 50 of that, just $50. It might not get to my stop loss, but I might close the trade because all the valid reasons for me entering the trade has expired. I'm like, okay, no need to be in this position again. But not like price got to my stop loss, right? So another um trading outcome is called the break even. So break even is basically saying that you didn't make money and you didn't lose money. So these three things, small win, small loss, and break even, they are like regular. Most professional traders who do this for a long time understand that usually like almost 80% of your trades will be among these three. I'm talking to you from experience. So a lot of new traders, when they come into the market, they are not seeing enough profit, they are not seeing enough winning, they are not seeing small loss, small. They get so bored. I'm like, then they like, why? What's happening? It's normal. If everybody could go to the market and simply just double risk $50 and get $500 every day, it won't make any sense. Everybody will be doing it. But your ability to stay patient, to wait for the right trade that will give you that money, is what separates you from the other guys. Right? Your ability to be patient during these small win, small loss, and break even times is what will separate you from the other guys. Mind you, remember, you have the ability to control loss. You don't have the ability to control wins, but you have the ability to control loss. At least to a great extent, like about 95% of the time, except maybe on if and that will rarely happen to you if you trade very liquid instruments. The only way your stop loss can exceed, when you got out of the trade, will be situations where we get large gaps, and that's usually a very rare scenario if you trade very liquid positions trade on very liquid assets like major forex pairs, very high liquid stocks, maybe stocks on the high end of the S&P 500. So that's usually what we advise retail traders, to go for, right? And usually most of all these retail platforms, that's the type of instruments you see there. Except maybe for FX, if you are trading day trading, which I would not advise a lot of retail traders to do. You are holding positions for over the weekend, then you are putting yourself at that risk of getting a gap if your trade was entered maybe on the 30 minutes, 1 hour. But if it's on maybe 4 hour, uh, daily, weekly, that you should be fine most of the time from this gap issue. So the next trade outcome is the big win. Matter of fact, this is what you are just waiting for as a trader. You will just go get by the small win, small loss, break even, small win, small loss, break even, small win, small. They will just happen, but suddenly you get this big spike on your account, the big win. This is what you want as a trader. You want the small win, the small loss, the break even trades, and the big wins. These big wins, they usually will come maybe less than 20% of the time, or maybe like 20% of the time. They are not there all the time. I've had positions where I had to like stay small win, small loss, small. Then suddenly a trade is giving me 1 to 15 risk to reward. That's massive, right? So those are the trades that will move accounts for you. A lot of people see my accounts and like, Joshua, how do you do this? It's what I'm telling you now. I stay with the small win, and I stay with the small loss, and I stay with the break-even trade, waiting for my big wins. They will come. Especially these are, if you are a trend trader, this is so important for you to learn now. Personally, I like to trade trends. And the market does not trend every time. Let's not deceive ourselves. However, as trend traders, or personally, I won't speak for everybody. As a trend trader for myself, I would, you know, like to position myself to be able to take advantage of the market whenever a trends happen. Especially at the start of it, because that's how you get the big wins. So most retail traders, they don't understand the logic of trading. Trading in the long run depends solely on you understanding that you don't have control of the market in itself, but what you can control is your loss. How much do you want to lose in this trade? What's come to worst? How much can you say, okay, I'm comfortable with losing? That should be your maximum small loss per trade. Then you can have small wins. When the market goes in your favor, suddenly things are changing, and you feel like, okay, all reason for me to be in this trade no longer valid. You get out at small win, or maybe at break evens. Then few times you get this big spike on your account, boom, the big wins. Those are the trades we are waiting for. The big win scenario trade. If you check a profitable trader in the long run, that's how you see their account. You see this small loss, small win, small loss, small win, then a big win. Small loss, small win, big win. That's how I trade. That's how people actually, most professional traders I know, that's how they make money. They don't go into the market thinking they are going to make big money on every trade. They know and understand that, of course, small loss, no problem. Small win, no problem. Break even, no problem. They know that big one will come. So your job as a trader is to be patient during the small win, small loss, break even. Managing your positions well. And to avoid only one thing for you, as if you follow these four principles here: small win, small loss, break even, and big win, you'll be fine. The only thing you have to do as a trader, in fact, this is the eternal sin in trading. Avoid big losses. Avoid what? Big losses. These are people blow their account. You should avoid big losses. You don't have to take excessive risks. If you have small win, small loss, break even, small win, small loss, break even, a big win, you'll be fine. But immediately you have small win, small loss, small win, small loss, a big loss, then first of all, your psychology will change. You can't think straight anymore. You'll be feeling like you have to put on more risks so that you can gain back the money you've lost. And that will not be good for you in your trading. You can't trade well. So as traders, I want you to do something. Tell yourself this coming week, because today is the last day for trading this week on the forex markets and the stock market, except maybe for cryptos that trades over the weekend. But for you as a trader, most of the time on weekend you will not be trading. So next week, sit down, observe your trading results. Is your trading result, is the pattern small win, small loss, small win, small loss, break even, big win? or small wins, small loss, small wins, small loss, break even, big loss. Go back to those old accounts you've blown before. Go back to those old accounts you've blown before. You see the reason that those accounts were blown was not necessarily because you lost several amount of trades. It was those few trades that you just lost bigly, or if there's any word like that. No, those big loss. That's how people blow accounts. When you hear somebody say, this guy just blown an account, I'm like, that's what is alien to us here at Swahili. We don't blow account here. We can't blow account. This is a very simple rule. Point blank, look and see, and you will succeed in this business. A lot of people have not seen it this way, but I'm showing you this way right now. Matter of fact, this has been something we talk a lot in our PMI program. Those who join the PMI program, they know trading is a game of numbers. The business is totally a game of numbers. So you want to be in a scenario whereby on your small win, say you want to be in a scenario whereby you're losing, I don't know, let's see if I can get some done. Okay. Say yeah, you're losing, maybe you're winning say $100. Yeah, you're losing $100. This one you're not winning, and neither are you losing. But yeah, maybe you're winning $300-400, or maybe more than. You see that by that alone, these two are skilled each other. That is, this win was taken away by this small loss. Then you didn't make any money, and suddenly you made a big win. Imagine continuing this rotation. You'll be better off in the long term. All you have to do as a trader is just to avoid this guy. You should never come to a situation whereby you are losing so much on your account. You should never come to that type of situation. Never, ever. Right, guys? So I hope you guys are getting it. Right? I hope you guys are getting it. So our time is getting fast spent. I want these sessions, these trading school sessions, to be very fast and educative, sharp to straight to the point, and you get whatever I'm trying to pass across, right? So yeah, if you have any question, you can ask me, and just put it on the comment section. Now I'll check it out. Mr. James is asking, how do we avoid the big loss? Oh, okay. So how do we avoid big loss? How do we avoid big loss? That's one of the simplest things to do as a trader. First of all, you have to tell yourself, how much am I willing to risk? How much am I willing to risk? So I was still getting the same question from Olalekan. Okay. So how much am I willing to risk? How much are you willing to risk? If you have, say, a $10,000 account, how much are you comfortable risking? And usually, in professional terms, that should never be more than 2% of your account. Matter of fact, I put that number at maximum 1%. Max 1%. So how do you do that? Right? How do you do that in real life? How do you do that? Okay. Let's see if I can share my screen. Let me share my screen with you guys. So I'm going to mentor trader right now. So let's go for Euro and GBP, USD, whatever. If, for example, I want to sell here, just for example, this is not trade advice, and I want my stop loss to say be, I don't know, above here, let's just say 100 pips, right? So that'll be, so maybe I'm selling. So I know my stop loss is 100 pips. What you have to do is to like go to put your account currency, account size. What's our account size now? This account's like 9,592. At 992. Then our risk 1%. Our stop loss put 100, which is like 10 pips. Then our contract size remain the same. Our what's it called now? By using GBP USD. Right, so let's calculate. Recommended lot. Simple. You take this. I'll use we can't use 3 digits, but we can use this 0.95. Copy. Go to the platform. Just say sell, right? 0.95. So, right. I hope I got them. Okay, I got it. So, what I'll do then, I'll put my stop loss. My stop loss is like 100 pips. So 100 pip plus my entry price, which is like 38. So I'll just add one. That's 100 point, not necessarily 100 pip. Anyway, it's like 10 pips. That's 38608. So because it's a sell, to be above. So if we zoom in now, if I over here, you see that the what's it called now? Matter of fact, do you guys understand this aspect of MT4? Whereby if you over around your stop loss, you see that the maximum you can lose if price get to your stop loss, like on this trade right now, is 95 US dollars, which is around 1% of this account, right? From 95,000. You know, that's how you avoid the big loss. You calculate your position size. That's how you avoid the big loss. So what's come to us, this is how much I will lose, 1% of this account. So I want you guys to watch this video from let's see the PMI program and how you can be part of it.
Has been trading me, and I've lost a lot of money. I may not have lost up to what you have lost out there, but I've lost quite some amount. Yes, until I met Suavely Market. I used to believe and I used to think there is a holy grail to forex trading, which a lot of professionals do not tell us. But meeting with Suavely Market, I found out there is no holy grail anywhere. The holy grail is you, because you are the only constant thing in the market. Good morning, everyone. My name is Adewi James. I'm a graduate of the PMI Professional Mentorship Initiative of the Suavely Market, a Forex institute. I just finished a 7-week intense course, beginning from the fundamentals of Forex. We delve into the technical aspect of Forex. We moved a step further into the quantitative aspect of Forex, which most people do not even talk about, except the institutional traders. We moved into portfolio management, building up a portfolio, speaking about diversification. Not just that, we moved into economics, understanding the law of demand and supply, how it affects the currencies we're trading. We moved into macroeconomics and microeconomics, these things that affect the policies that affect the movement of prices. These are the things and much more that we learned in Suavely Market. Thanks to Suavely Market for unveiling this secret to us. I can boldly say anywhere that I'm a trader. I am a trader. Before, Forex traded me, but now, not now. Now, I'm a better person. And I'm encouraging everyone out there, if you have ever lost money before, or if you've ever dreamt of trading Forex at all, or whatever kind of trading, be it commodity trading, you want to trade oil, any form of trading, come to Suavely Market. You will gain value for your time and value for your money. Thank you very much, the Suavely team. Thank you, Mr. David Alagbara. Thank you, Mr. Joshua. Thank you, everyone. I remain James Adewi, a proud alumni of Professional Mentorship Institute of Suavely Market. Thank you.
Wow, 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 wow. All right, guys. So you can see that the guys who take the PMI, they don't just come out as any kind of people. They come out as proper traders. They come out as proper traders because they are grounded. Because I'm a graduate of University of Benin. When you get into the University of Benin, you see like the way there's this sculpture they have in the school. As you get inside, they bend more, they bend more, they bend more. And when we asked why were the sculpture made like that, they said Unibend is meant to bend you, that type of thing. So really, that's the approach we give to them at PMI, because they don't just learn any technique, they learn proper money management. We've actually really covered a lot. So let me just go back to what we did today. So we said there are 5 outcomes of a trade. There's a small win, small loss, break even, big win, and big loss. And our single job as a trader is to avoid what? The big loss. And I showed you guys how you can do that through position sizing, right? You can do this through position sizing. So we did question and answers. So all right, guys. So thank you very much for joining me tonight. So today we took an hour, but I want these sessions to be 30 minutes maximum. So from our next session, so remember this show is supposed to be every Friday. Take note of it. The Trading School with Joshua E. OFOMAJA. Every Friday, 8 p.m. GMT+1, which is Nigerian time. I'll be here. Teaching that knowledge. So if you have anything you want me to talk about, any area of your trading you've been finding difficult to in managing, put your question on our discourse group. I'll post the discourse group on our Telegram channel, because you must be part of our Telegram channel for you to be able to join the discourse group. The discourse group is a private, exclusive group, right? The discourse group what is a private exclusive group. All right, guys. See you guys next week on our early trading course. So with David Alagbada. So that's where you should be next week. Thank you.